Do you think that Kathy's optimistic views regarding Tesla are warranted, or do you have similar opinions? Although she has always been optimistic about Tesla, what are your current feelings on the company? We'll get a glimpse of what Tesla is working on right now in this video, along with opinions from investors like Kathy. We'll also provide you with a brief profit forecast, which should aid in choosing your next course of action. Now, let's begin this video without further ado. Make sure to hit like and subscribe on Tesla stock news first, though. ARK Invest boldly asserted in a recent piece about Tesla that the Cybertruck would gain the same level of general acceptance as the Tesla model. Excitement has been stirred by this astonishing revelation. Let's examine this fascinating subject in more detail. Previously, forecasters, analysts, and automakers believed that electric cars EVs would stay a niche product. It seems, nevertheless, that they were also misguided regarding the Cybertruck's potential. These low expectations are contested by ARK Invest, which also draws attention to an industry blind spot. Currently, a lot of manufacturers use the money they gain from selling gas-powered trucks to subsidize the development and marketing of unprofitable electric vehicles. It would be extremely problematic for traditional automakers if the Cybertruck were to upset this profit center. This is a given. It's not just a possibility. Though a little bit late, some automakers like General Motors are starting to make the correct decision, so there is yet hope for them. The U.S. Energy Information Administration forecast that long-range electric vehicles would have little to no market share in the U.S. by 2040 in its first year of existence, 2014, a fact that ARK Invest highlights. Remarkably, just 1 year ago, the U.S. EV market share hit 5%. The EIA must have drastically changed its forecast, presumably anticipating at least a 50% market share, one would think. Even so, though, would be viewed as bearish. It is noteworthy that by 2030, 2035, and 2040, a number of states and areas across the globe intend to outlaw the sale of gas-powered automobiles. When generating projections, these aspects would surely be taken into account. ARK Invest has been outspoken in its skepticism of the Energy Information Administration's forecasts, even speculating that the intelligence underlying them has deteriorated. They have doubts about the EIA's capacity to predict the future of the market for electric vehicles. The aspirations of established automakers like Ford and General Motors are emphasized by ARK Invest as proof that the electric vehicle revolution is well underway. They stress how these established automakers are making significant investments in electric cars, indicating a move in the direction of a more sustainable future. The idea that EV adoption is just a niche trend is called into question by actions like these taken by well-known industry heavyweights. ARK Invest seeks to undermine the EIA's forecast by highlighting the progressive tactics of firms like Ford and GM, implying that their evaluations fall short of fully realizing the potential and propelling the expansion of the electric car industry. This criticism highlights their view that the future of transport will be more and more electric, and our opposite confidence in the mass adoption of EVs. While GM intends to transition to all electric vehicles by 2035, Ford anticipates 40 to 50% of its global car volume to be electric by 2030. Considering that numerous U.S. states, including California, which alone represents roughly 13% of the U.S. market, intend to outlaw the sale of gas-powered vehicles after 2035, one can't help but wonder what statistics the EIA is using. It becomes clear that the EIA's forecasts are inaccurate. I'm happy with these forecasts, despite my seeming irritation because they offer us investors a great chance. The government is not the only entity considering a slow adoption rate. Fund managers and individual investors are also unaware of the situation. I must admit that few people can be as misinformed as they are. Even though I do not think the rate of EV adoption will be as sluggish as the government agency predicts, it appears that they did not understand exponential expansion, as can be seen by looking at patterns in the past. Furthermore, even though electric trucks are expected to have a market share of less than 10%, the EIA projects that trucks will make up 69% of all vehicles in the U.S. by 2050. However, ARK Invest is not in agreement with this prediction. They also indicate that 1.5 million reservations have already been made for the Cybertruck, which raises the possibility that electric trucks may succeed. Early Google Trends data suggests that the Cybertruck may overtake the Tesla Model Y in terms of popularity. I realize that using Google Trends alone might not be the most dependable method for making precise forecasts, but bear with me. Just as Elon Musk tweeted about seeing the Cybertruck production line on April 2nd, 2023, more people searched for the Cybertruck on Google than for the Model Y. Interestingly, the majority of searches for the Cybertruck came from truck enthusiast areas, indicating that there may be a desire to buy it. The red color's intensity on the map signifies the concentration of searches in these particular regions. In the end, the Cybertruck's viability will be significantly influenced by its cost. Sales may not be great if it's too pricey, but they may skyrocket if Tesla can provide a more reasonably priced model. Investment firm ARK Invest continues to emphasize that even while sell-side analysts would be uncomfortable projecting the electric vehicle industry to develop at an exponential rate, it would be a mistake for them to overlook the possible consequences of the Cybertruck's success for conventional manufacturers. ARK Invest estimates that 70% of EVs may be adopted worldwide by 2027. This number sounds high, yet it's not completely unattainable. Experts are debating the Tesla Cybertruck's quality on Twitter in response to a picture that has been making the rounds. It's important to remember that the Cybertruck is currently only a prototype. But given that the Model Y has emerged as this year's best-selling car, it is reasonable to anticipate that Tesla will continue to produce products of a high caliber. Most likely, any first worries regarding quality may be addressed and fixed. Cathie Wood spoke about Tesla's AI strategy recently on Bloomberg. She brought up the network of autonomous taxis that Tesla is rumored to be developing. Compared to other auto and tech businesses, Tesla has a substantial advantage in terms of proprietary data and actual driving miles. With the uncertainties of the Chinese market removed, Wood thinks there is a huge opportunity in the autonomous taxi space with a business that can safely and quickly transport people from point A to point B, predicted to have a dominant share of the market in the US. According to Wood, Tesla will be that business, and by 2030, this potential might bring in trillions of dollars worldwide. For this reason, Wood and her colleagues are especially enthusiastic about Tesla's artificial intelligence AI developments and the company's growing manufacturing efficiency both in factories and in automobiles. Although some might consider Cathie's excitement about Tesla stock to be excessively optimistic, a more thorough examination of her background indicates an incredible success rate, specifically with Tesla. I completely concur with Cathie's points of view, especially her emphasis on how important fully autonomous driving technology will be for Tesla in the future. Cathie is deserving of recognition for her outstanding results in the Tesla stock market thus far. It's important to remember that Cathie's choice to not. It has been helpful to sell Tesla shares when it surpasses a 10% allocation restriction. She has shown that hanging on to these positions may produce remarkable returns, even though she is unable to expand her holdings after the stock crosses this level. Her performance over the last 5 years would have been far worse, around negative 10%, if she had sold Tesla stock each time it rose above 10%. During the COVID pandemic, our connection with China has been really interesting. At first, we invested heavily because we thought China's fiscal and monetary policies had potential. However, things have drastically changed since November 2020. We decided to drastically lower our exposure in China as a result of the harsh limitations and rules that management teams had to deal with. The notion of shared prosperity has surfaced, signifying reduced profit margins and restricted services that are exclusive to Tier 1 and Tier 2 cities. Even though we are still somewhat involved in JD Logistics and JD, we have reduced our exposure till China opens up to foreign investment once more. Despite my deep affection for Tesla stock, the one thing that worries me is that it is susceptible to fluctuations in the US-China relationship. But in the long run, I think this worry is largely short to medium term in character, and China will become less important over time as a result of Tesla's goal to diversify its operations and build gigafactories abroad. Furthermore, Chinese businesses might find it difficult to enter Western markets, while Tesla might have trouble selling to the Chinese market even in the worst-case scenario, when tensions grow and trade barriers materialize. Such a condition might not necessarily be harmful, given that China is likely to develop formidable competitors in the long run. We would appreciate your support if you like this work, so please like and subscribe. We appreciate your time and hope to see you in the upcoming video. Music. Regards.